Good morning, and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew. Now, we did hit a fresh record high for the benchmark index in trade yesterday. 19,819.45 is now that high watermark for the Nifty 50, and it's been reaching new levels practically every other day. We did end well, not very close to that lifetime high, and we've hovered in a very narrow range if you actually go to think about it, because we have gained very significantly in a very short period of time. And you saw quite a lot of pressure in the broader end of the market yesterday. You had the small cap index drop over 1%, and you had most of the sectoral indices lose ground, including PSU banking index, which has gained quite a bit in the recent past and lent quite a bit of support to the Nifty Bank as well. State Bank of India down in trade, and quite a few others as well. Nifty IT proved to be a bright spot in trade yesterday, that pack gaining as much as 1%. And a lot of the guests that we've had, in fact, one particular analyst pointing to the possibility of a bottoming out of the prices, even if earnings have not bottomed out for some of these IT companies. Infi is going to be posting its results tomorrow, so you would want to watch out for both Infosys as well as the rest of that pack in trade today. Key levels that you want to watch out for the Nifty 50 consolidation levels seen between 19,700 and 19,800. There are now murmurs happening, or murmurs that you can hear about 20,000 on the Nifty 50, whether that is something that we can achieve in the near term or not. In fact, we will be conducting a poll of market participants to find out. If you'd like to weigh in on that, let us know in the comment section. Now, in the meanwhile, Bank Nifty levels that you want to watch out for. It has failed to close above the previous swing high of 45,656. And until 44,500 is taken out on the downside, there seems to be a little bit of support that is building for the Bank Nifty at the current level. Now, one of the stocks that you will definitely have to focus on today is Reliance Industries. This is a stock that has gained very handsomely in the past few weeks, and that is all leading up to the demerger that is set to take place tomorrow. The record date for the demerger is set for the 20th of July, and that means Jio Financial Services will split from Reliance Industries. Now, we did an explainer yesterday, which I think a lot of you tuned into, and you've got quite a few of your questions answered. But there are a few more that, in fact, have been asked on our social media platforms, and Sajid is joining in to answer all of them. I promised that yesterday. Morning, Sajid.
Morning.
So I'm going to pull up some of those questions, but I think one of the most basic questions was what we started our explainer with yesterday, which is the fact that today is the last day. And why is today the last day? You can't buy on the record date and also get entitled to a JFS share.
So we are in a settlement cycle which is called T+1.
Yeah.
Okay, so today if you buy, you're going to get it tomorrow, and the same is going to be the case for Reliance. That if you hold Reliance shares tomorrow, you'll get a JFS share, or if you buy today, you get the Reliance share in your demat tomorrow, and that's how you are eligible to get a JFS share.
So basically, you need to be owning the underlying, and you need to have that underlying in your account.
That's right.
And on that record date, the number of underlying shares that you have in your account is the number of JFS shares that you will get, because it's a 1:1 issue. Now, there were a few more questions. That question, by the way, was from Aditya Parak, who's written in on Twitter. Sunny Agarwal is asking, what will be the constant price of Reliance demerged price is more than the previous price? So,
okay,
but let me clarify that. What the question is, and I'll ask you what the constant price is and how. Okay, let's establish that first. How is the constant price achieved in the first place?
So the constant price
for JFS
for JFS will be the difference between today's closing price and tomorrow's discovered price for Reliance. So that difference will be the constant price for JFS till the shares of JFS list on the stock exchanges.
Okay. So we've established so in figures, assume we're at 2,808 or thereabouts for Reliance Industries. Even if we go to 2,850 today, if tomorrow the price that is discovered for Reliance Industries is 2,650, then JFS constant price will be determined as 200, and JFS constant price will remain 200 till it is listed and it starts trading individually. So that's the answer to that question. The question that Sunny Agarwal is asking is, what if we closed today, Reliance Industries 2,850. And tomorrow in the discovery period, which is 9 to 10, at 9:45, we find that Reliance trading without JFS is trading at 2,950. So therefore, Reliance without JFS is priced higher than Reliance with JFS.
So, the entire special pre-open session is meant to discover the price of JFS, and that's done through a differential pricing of today's minus tomorrow's pricing. But if tomorrow Reliance pricing or the discovered price of Reliance is about today's close, which is Wednesday's close, then JFS price will be taken as 0, and it will continue to trade in pre-open sessions in consecutive days or in subsequent days, basically, till a differential amount is not determined for the JFS.
And the chances of that happening are
very low.
0.
It's an index stock, so it won't happen much.
Absolutely. All right. So one other question which I can very quickly answer, Dhruv Goyal is asking, does this mean that when JFS gets listed next week, it'll be treated like any other listed stock, or would there be a separate IPO for it? No. So it is going to be, this is a demerger and listing of a subsidiary, and therefore it will be listed and it will trade. Sajid just explained that once the stock
So
gets
I think
listed,
what he means to say that will it be treated like an IPO stock or not?
Okay.
So what happens is that when you're listing a new company to a stock exchange, there are certain regulations which come into being because there's a pre-open price. In this case, the pre-open price would be, is determined, is going to discover the price of Reliance and the JFS constant price, and when it's going to list on the stock exchanges, as for any other listed stock or listings, new listing stock, there will be price band action which will be there. The stock will not be allowed to move freely there for a couple of days as per the stock exchange norms, and then it's going to trade in the normal market. Again, let me repeat that when it lists, it gets off the indices on the close of trade on the third day. But if it hits a price band on the first or second day, then the extension is for another 3 days or so. So that continues till 2 consecutive days of non-price band closing happens, and then on the third day, even if there's a price band, it gets excluded from the indices.
And price band, effectively, you mean circuit, right?
Circuit.
Yeah. All right. So the last question I will take today is from Amit KR Agarwal, and he's asking how will we allocate price to both stocks as per our cost. And what I think he means is with regard to calculation of LTCG or STCG, long-term capital gains or short-term capital gains.
So, no, my knowledge is limited here, but what I understand is that when the discovery happens tomorrow, and if you're holding a stock today and you are, and suppose you're going to sell it tomorrow or day after tomorrow, then there is a correction in price which happens because of discovery. It's like any other stock price which happens, like in a whether for a rights issue or for a bonus or something. So you can you have a basically short-term capital loss which is coming in, but that assigned value to or constant price of JFS will give you a value for that stock. So you may have to pay a tax on that. So if it's on a tax point of view, I suggest he should consult a tax consultant to finally calculate how much is
I think it's a good enough question, right? It's a good enough question because I would think so. Is your JFS is the constant price? What
because
is effectively...
JFS is going from 0 to the constant price, or the price discovered thereafter when it lists, and Reliance comes down from 2,800 odd to below 2,800. So there's a capital loss happening on Reliance on one side.
Yeah, it's an interesting question, and I think I will try and get that answered from a tax expert as well. But Sajid, thank you so much for joining in. In case you want to watch the rest of that explainer, we've gone into quite a bit of detail. It's available on our social media platform. And in fact, I'll ask our social media team to post it in the comments as well so that it's easily available to you. Let's turn attention now to earnings. And we've got ICICI Lombard to focus on first. Monal is joining in to tell you a little bit more about this. From what I saw, I just saw the headlines, 12% increase, if I'm not mistaken, in the PAT number and around that same growth in revenue. What can you tell us about the intricacies of it?
So, of course, there's a 12% rise in profits. However, it still missed the estimate. So the street was estimating a higher profit from the company. The net premiums have, however, risen by an equal amount. So they're up 12%. So it's strong in terms of growth on the premium side. but there seems to be some weakness due to the cyclone effect that the company has witnessed. So there's a higher claims payout. The proportion will now be discussed in the interview that we are going to have right after this, which will happen at around 10 a.m. The EBITDA has been up 5%. Combined ratio has in fact improved to 103.8% from 104. And the company, mind you, in the last quarter had guided that by 25, they're intending to reach 102%. So we could say that it's slightly inching towards its goal. However, of course, we need to see the whole year before we can make that conclusion. Like I said, the claims ratio is 74%, 2% higher than last year, the June quarter last year. Overall expenses of management have improved, which is the new recent limit that has been set by the IRDAI. So it has to be under 30%, and the company is doing extremely well with the June quarter clocking in 26.6% of expenses of management. Solvency ratio slightly down at 2.53%. Overall, if we were to look at it segment-wise, fire is on a negative. It's shown a degrowth versus last quarter, 30% down. Motor has, however, shown a significant rise. It's doubled almost. Retail health and group health have seen a decline. So in the retail health segment, the company did mention that it was taking a price hike in the March quarter. But however, that still hasn't been able to match up to the June quarter operating profits of last year. It's down 6%. And on the group health side, it's down almost 4 times the operating losses. So they widened. Overall, we need to discuss why this has happened in the chat that is to follow. But that's how the company has fared this quarter.
All right. And so viewers, thanks, Monal, for that. Do tune in to that conversation with the management of ICICI Lombard. Switching gears and talking about the banking space then, and we had IndusInd Bank post its results for the first quarter. And again, I've just seen the key highlights. There seems to have been an improvement broadly in asset quality and quite a substantial growth in both net interest income as well as the PAT number. Jaspreet is here to tell you more about that. Morning, Jaspreet.
Yeah,
what can you tell us about IndusInd?
So yeah, as you said, good growth in profit, good growth in interest income. 30% up is the net profit, and about 18% is the net interest income. Asset quality is also slightly improved. Overall, it was a result that was broadly along expectations. So, it's interesting to see how the market will react to that as well. But the key highlights that we sort of picked up out of the results themselves were things like, while this is the first time in 3 years that IndusInd Bank's provisions have fallen below 1,000 crores, so clearly they're expecting good asset quality going forward. Asset quality overall in their portfolio did improve, except for in the vehicle loan portfolio, which the company said is somewhat seasonal in nature due to commercial vehicles. Overall, I think the sticking point for banks at this stage is liabilities. So they've been targeting sort of HNI or or focusing on HNI or affluent customers to build that base for them. And their target is to have a CASA ratio of about 43 to 45%, which is currently at about 40%. Another thing that IndusInd Bank has been building out is its home loan business. It's currently in pilot stage, but the management did indicate that over the next 3 years, they want to build a 15,000 crore home loan book. So we'll see how that impacts the home loan market as well.
All right. Thanks so much for that, Jaspreet. IndusInd Bank, watch out for that in trade as well as the rest of the banking pack. They were under a little bit of pressure yesterday, at least the PSU banking pack, as I mentioned, was. But the Nifty Bank has been heading higher and has caught up with the rest of the market in terms of the rally earlier in the week. Varsha is joining in now to tell you more about a few more stocks that have posted their earnings for the first quarter. Morning, Varsha. What do you have for us?
So I've got a few companies who have posted June quarter results. So the first one is TV18. So TV18 Broadcast Limited, which is subsidiary of Network 18. The revenues were up 151% at rupees 3,176 crore, while there was an EBITDA loss of 54 crore, and the EBITDA margin was at minus 1.7%, while the net profit was up 50% at 90 crore. Now, you would ask why the net profit is up while the EBITDA, there's an EBITDA loss of 54 crore. Due to one of the reasons is other income which company has got of almost 200 crores. The other company that we have is Network 18 Media and Investments Limited. Now, the revenues were up 142% at rupees 3,239 crore, while there was again a EBITDA loss of 84 crore and EBITDA margin of minus 2.6%, while net profit was down 25% at 29 crore. The good growth in revenue was actually led by the streaming of IPL on Jio Cinema. The next company that we have is Himadri Specialty Chemicals Limited. Now, the revenues were down 9.1% at 951 crore, while the EBITDA was up 54% at 131 crore. EBITDA margin was at 14% and net profit was up 125%. Now, the interesting thing about this company is now, the world is going crazy for electric vehicles and for lithium ion batteries. Now, this company will start making raw materials for lithium ion batteries. So for this, company has made a strategic investment in Sicona Battery Technologies, which is based in Sydney. The next company that we have is CIE Automotive India Limited, which is the unit of Spain's CIE Automotive. Revenues were up 4.6% at 2,320 crore, while EBITDA was up 21% at rupees 370 crore. EBITDA margin was at 16% and net profit was up 60% at 302 crore. Now, this was boosted by growth in Indian and European markets. Also, earlier in this quarter, Mahindra divested its entire stake in the company, resulting in the name change of the company from Mahindra CIE Automotive to CIE Automotive Limited. Now, this quarter saw an sequential uptick in India's two-wheeler market on improving consumer sentiment and due to the wedding season. Plus, the passenger vehicle volume growth was moderated due to supply chain issues. Now, this is actually a proxy play to automobile industry, and this company being an automotive component, the financials of this company will actually depend on how automobile industry will do.
Certainly, and that entire auto ancillary pack is what we have been focusing on in the recent past. Varsha, thanks so much for joining in. The likes of Motherson, the likes of Samvardhana Motherson, I should say, and several others are very closely watched because, as Varsha pointed out, when the ecosystem of OEMs start doing better and you see wholesale numbers picking up, automatically you see revenue increases for the auto anch players as well. We've got an update on Adani Transmission to talk about next. And you saw in the AGM for Adani Enterprises yesterday, the chairman of the group speak about quite a few of the companies. He also gave updates on Adani Transmission, but this is a Q1 business update that Rishi is here to talk about. Rishi, good morning. What do you have for us?
So first, let's talk about the operating efficiency numbers. It's at 99.7% with regards to system availability, and the system reliability was at 99.99%. However, if you look at collection efficiency, it fell by 132 basis points to 97.29%, and the company has attributed this fall to seasonality. Now, coming to its operational network, it added another 550 circuit kilometers to its operational network, taking the total network to 19,778 circuit kilometers, which is about 5% higher year on year. Now, one space that has been in focus recently in the power sector is the smart meter space, and with especially with Genus Power and GMR Power receiving smart meters orders from state governments. Now, Adani Transmission also received a 2.7 million smart meters order from the Andhra Pradesh government with a contract value of 3,700 crores. The company said that it is fully geared up to participate in any future tenders that may come up in this space. So the smart meters is something that's interesting to look out for. Then it also the company's distribution loss, it improved consistently and it fell to 4.85% in this quarter compared to 6.95% that was there in the first quarter of FY23. Adani Transmission's revenue is expected to expand by 18%, and the annuity income is expected to cross 4,000 crores, but there was no timeline that was given by the Adani Enterprises chairman when he announced this in the AGM. Now, Adani Electricity Mumbai, which is Adani Transmission's Mumbai arm, it reported a 7.6% year-on-year rise in units sold, and this was on account of an increase in energy demand. Now, if you look at Adani Transmission's Mumbai arm, which I just talked about, about 40% of its power it blends with the renewable energy, and it plans to increase this to 60%. So the company has said that this has also helped it to reduce its tariffs. So if it increases to 60%, we Mumbaikars may as well see a smaller number while paying electricity bills.
That's absolutely great news. Thank you so much for that, Rishi. And if indeed Mumbai manages to get over 50% of its electricity from renewable sources, it will be one of the first mega cities in the world to get that amount of electricity from renewable sources. And as Rishi pointed out, the cost per unit of electricity from renewable sources like solar in particular are lower now than traditional sources. Let's talk about a few more stocks, and we've got both Mihika as well as Saloni joining in to tell you more about the stocks that they've read about. Morning, ladies. Let's start with you, Saloni. What are you picking up?
Right. So first we have L&T Technology Services. So the company won a contract worth $50 million with a global technology company yesterday. So the contract was secured to enable new opportunities for digital media platforms. So this agreement carries a 5-year tenure and it's tailored to significantly enhance the flagship suite of products. The company will also be streamlining the workflow processes and reducing the product development cycle. Then coming to State Bank of India, it has set up a new trustee company as a wholly owned subsidiary of a bank for managing the corporate debt market development fund, for which SBI Funds Management Limited identifies as the investment manager cum sponsor. So this corporate debt market development fund is the government's effort for a backstop facility for specified debt funds. Now coming to Bank of India, so the bank has appointed Yusuf Roopwala as the Chief Technology Officer for a period of 3 years on a contractual basis starting yesterday.
All right. Mihika, what are you picking up?
Yeah, so first is Hero MotoCorp, which has actually 2 updates. The first one is has launched its new Extreme 200S 4-valve motorcycle. This product is an all-day sports motorcycle, which is introduced as a part of the company's Extreme portfolio. And the motorcycle will be available in all the dealerships across the country at a price of 1,41,250 rupees. Additionally, according to Bloomberg First Word, the company's board of directors have been summoned by India's Corporate Affairs Ministry for questioning in an investigation pertaining to alleged diversion of funds. The board of directors will send notices to appear for the questioning between July 14th and July 21st. The ministry has also ordered a probe into the company last month in public interest to look into the alleged corporate governance lapses and the ownership structure of the company, along with its relationship with an alleged linked entity, which is called Salt Experiences. Secondly, we have Ramkrishna Forging, which has commenced its commercial production of a 13,700 ton per annum press line and a 10,100 ton per annum upsetter at its new plant in Kharswan, Jharkhand. The press line has been established to manufacture RA shafts, and the upsetter has been added to cater to the additional demand from the customers. The new plant is set to enhance the company's capacity by 23,800 ton per annum, bringing the new production capacity of the company to around 2,10,900 TPA. The plant was built with a 71.17 crore capital expenditure, which is financed by a mix of equity and debt. Thirdly, we have Clarios ARBL, which has sold its entire 14% stake in Amara Raja Batteries via block deal yesterday. A total of 2.4 crore shares were offloaded at a price of 652 rupees. Society General bought 42 lakh shares or a 2.5% stake in the company. Other buyers included BNB Paribas Arbitrage, Tata AIA Life Insurance, Nippon India, etc. And lastly, we have Federal Bank, which is going to consider preferential issue of 7.26 crore shares to the International Finance Corporation, the IFC Financial Institution Growth Fund, and the IFC Emerging Asia Fund on July 21st. The minimum subscription price per share offered to the QIBs are not to exceed rupees 131.91 per equity share. And post transactions, the investors will hold an aggregate of 17.75 crore equity shares in the company.
All right, Mika, thank you so much. Saloni as well for bringing us all of those stocks. A lot of stocks that we've discussed today on the program, and key among them, of course, is going to be Reliance Industries. You could see quite a bit of a pop in trade. As I mentioned, today is the last day to acquire Reliance Industries if you want that JFS entitlement as well. 1:1 is the ratio, and so therefore the number of shares that you hold in Reliance Industries, that's the same number you will hold in Jio Financial Services as well. We'll bring you more news and updates over the course of the day. You'll find all of that right here on BQ Prime.